Let me slow this down for a moment, because a lot of people are being misled right now, not intentionally, but dangerously. I keep hearing the same sentence over and over again. Social Security isn't taxed anymore, so I don't have to worry about it. If you've heard that, or you believe that, you are not alone. And I'm not blaming you. The way this information is being talked about online is confusing, incomplete, and in some cases, flat out wrong. Here's the truth, stated clearly and calmly. Most people receiving Social Security can still owe federal taxes on their benefits. Nothing magical has changed, and assuming otherwise can cost you thousands. I know that's not what people want to hear. Everyone is tired of taxes. Everyone is hoping for relief. But hoping doesn't protect you. Understanding does. And today, I'm not here to scare you. I'm here to protect you from misunderstanding something that hits retirees, widows, disabled workers, and part-time seniors every single year. This system is old, it's confusing, and it hasn't kept up with real life. To understand why this keeps happening, we have to go backwards, not to last year, not to the last election, but all the way back to the 1980s. That's when lawmakers decided that some Social Security benefits would become taxable. The idea at the time sounded reasonable on paper. They said only higher income retirees would be affected. Regular people were not supposed to be touched, so they set income limits. If you were under those limits, no taxes on your benefits. If you were above them, part of your benefits would be taxed. Here's the part that almost nobody tells you. Those income limits were set more than 40 years ago, and they were never adjusted for inflation, not once. Think about that for a second. Everything else in your life went up: food, housing, utilities, medical care, even wages slowly. But those Social Security tax thresholds stayed frozen in time. What used to apply only to wealthy retirees now hits everyday people who are just trying to survive. That's why so many seniors get blindsided. They're not doing anything fancy. They're not rich. They're not gaming the system. They're just working part-time, or taking a small retirement withdrawal, or living on a survivor benefit after losing a spouse, and suddenly the IRS shows up. Here's where most confusion starts. Social Security is not taxed the same way as a paycheck. Instead, the government uses something called combined income. That phrase alone causes panic, so let me make it simple. Combined income is not your full Social Security check. They don't count all of it. They take your other income, plus any tax-free interest, plus half of your Social Security benefits. That final part matters. So if you receive $30,000 a year from Social Security, only $15,000 of that is used in the calculation. Now, here's how the thresholds work. If you're single and your combined income stays under a certain line, your Social Security is not taxed at all. Cross that line, and suddenly up to half of your benefits can be taxed. Cross the higher line, and up to 85% of your benefits can be taxed. Not taxed at 85%, but 85% of your benefit becomes taxable income. That difference matters, and a lot of people misunderstand it. This is where real-life situations come in. A retired worker picks up part-time hours to help with groceries. A widow goes back to work after losing household income. A disabled worker tries to earn within allowed limits. A veteran supplements benefits with another source. None of these people are doing anything wrong, but even small income changes can push someone over the line. And here's the most frustrating part. Many people don't find out until tax season. No warning, no letter, no alert, just a bill. That's why believing Social Security isn't taxed anymore is so dangerous. The rules did not disappear, they did not pause, and they did not get simpler. Before we move on, there's one more thing you need to understand, because this surprises almost everyone. When you pay taxes on Social Security benefits, that money doesn't just vanish into thin air. It actually goes back into the Social Security system itself. That's right. The taxes paid on benefits are used to help fund the program. So when people talk about eliminating Social Security taxes entirely, it sounds great. But unless that lost funding is replaced, it creates another problem. Faster benefit cuts down the road. This is why the issue is more complicated than headlines make it seem. And this is exactly why you need to understand your own situation, not just what politicians promise and not what viral clips suggest. Because the system isn't protecting you by default. You have to protect yourself. And that brings us to the most overlooked step of all, the one almost nobody does, and the one that can permanently change your future benefits. Now listen carefully, this is critical, especially if you are still working, recently retired, or planning to claim Social Security in the future. After you file your taxes each year, there is one step you should never skip. Almost nobody talks about it. And most people only discover the problem when it's already too late. You need to verify that your earnings were correctly recorded by Social Security. Every year you work, money is taken out of your paycheck for Social Security. You see it listed as FICA. You assume it's being tracked properly. Most of the time, it is, but not always. Errors happen. Employers make mistakes. Numbers get misreported. Records don't transfer correctly. Sometimes entire years of earnings are missing or undercounted. And here's the brutal truth. If those earnings are missing, your future benefit is lower. Permanently. I've seen people lose hundreds of dollars per month because of an error they never checked. That's thousands per year, tens of thousands over retirement. The reason this happens so often is simple. Social Security no longer mails out annual statements. Years ago, they stopped doing that to save money. Now the responsibility is on you. You have to log in and check your record yourself. And the best time to do it is right after tax season, when your income information is fresh and easy to verify. If you wait until you're 62 or 67 or already filing for benefits, fixing errors becomes much harder. Old employers may be gone. Records may not exist. Proof becomes difficult. What takes 5 minutes today can take years later, if it can be fixed at all. This is one of those quiet mistakes that doesn't hurt immediately. It hurts later, when it matters most. Now let's zoom out for a moment. The reason so many people are struggling with Social Security taxes, benefit confusion, and planning mistakes isn't because they're careless. It's because the system hasn't been updated to reflect reality. Those income thresholds from decades ago should have been adjusted long ago. They weren't. Congress kicked the can down the road over and over again. So today, more people than ever are caught in the middle. They saved responsibly. They worked longer. They tried to supplement income carefully, and they're punished for it. Some people try to work around this by adjusting how and when they take money from retirement accounts. Others explore tax-free strategies. Some move states. Some don't have those options. The key point is this: you cannot assume the system will automatically do what's best for you. You have to understand how the rules apply to your situation. Know your combined income. Know what counts. Know when crossing a line changes your tax outcome. And above all, make sure your earnings record is accurate, because that record controls your future. This isn't about panic. It's about preparation. You worked your entire life for these benefits. You deserve clarity, not confusion. You deserve accuracy, not surprises. And while politicians argue and headlines oversimplify, the reality remains the same. The system only works well for people who understand it. So here's what I want you to do. After you finish your taxes this year, take 5 minutes, log in, check your earnings history. Make sure every year you worked is there and the numbers make sense. If something looks off, address it now, not later. Because later is when mistakes become permanent. Knowledge doesn't just feel good. In this system, knowledge protects your money. And that protection is something you can't afford to skip.